Hello students, this video is about the preparation of Statement of Affairs from the chapter Liquidation of Companies. I have already uploaded 7 videos for the chapter Liquidation of Companies, but many students as well as teachers were asking me to upload a video on the preparation of Statement of Affairs. Generally, there is an opinion among the students as well as teachers that the preparation of liquidator's final statement is easy and the preparation of statement of affairs is difficult. It is not at all so. You will be able to realize how easy it is to prepare the statement of affairs after watching this video. So your long awaited video on statement of affairs is here now. Let me proceed further. First, let me tell you the meaning of Statement of Affairs. Statement of Affairs is a document giving details about a company's assets and liabilities. So, what is Statement of Affairs? It is a document which will give information about the assets and liabilities of a company. Now, you have to know who has to prepare the statement. The statement has to be prepared by the directors of the company, by the company's directors, and it has to be submitted by the company to the official liquidator. I hope you are able to understand this clearly. Who will be preparing the statement? The statement of affairs will be prepared by the directors of the company, and after preparing the statement of affairs, the directors will submit the statement to the official liquidator, and this has to be done within 21 days from the date of the winding up order. Okay, so I think you are very clear with this. Now, what is the main purpose of the statement? You have to know. The main purpose of statement of affairs in liquidation is to share the company's position in a very transparent manner. What do you mean by this? To share the position of the company, to share the position of the company's assets and liabilities in a very clear and transparent manner, the statement of affairs has to be prepared. So this is what is the meaning of statement of affairs. Okay. Now let us proceed with the difference between statement of affairs and liquidator's final statement of account. You must be already familiar with what is meant by a liquidator's final statement of account. Actually speaking, there are two main statements in case of liquidation of companies. What are the two main statements you have in case of liquidation of companies? The first one we have is statement of affairs, and the next one we have is the liquidator's final statement of account. Okay, so what is meant by the statement of affairs? I told you already, is it not? This statement of affairs has to be submitted to the official liquidator by the directors of the company, and it will be showing the position of the company's assets and liabilities. Let me repeat once again. First, the company has to submit the statement of affairs to the official liquidator, showing the position of the company's assets and liabilities. After this is done, that is, after the statement of affairs is submitted to the official liquidator, then the liquidator will start the process of realizing the assets and making all payments. Okay. So, what is the job of the liquidator? What the liquidator is supposed to do? The liquidator will have to realize, will have to sell all the assets, isn't it? So, the liquidator will start the process of realizing the assets. Then after realizing the assets, what will he do with the money received from realization, or what will he do with the proceeds of realization? He will start making payments, and you will be able to recollect the point that payments will have to be made in an order. There is something called as order of payment, about which and all I have told you very clearly in my previous videos relating to this chapter liquidation, in which we have prepared a number of liquidators final statement of account. Okay, the description, in the description I'll give you the links for those videos. If you see those videos, you'll be able to understand all this better. So this is what is the job of the liquidator. He'll be realizing all the assets and he'll be making payments. And then he submits a statement, and that statement is only called as liquidator's final statement of account. So try to get the difference between the statement of affairs and liquidator's final statement of account clearly. The statement of affairs is something which is prepared by the directors of the company and is submitted to the liquidator to give a clear picture about the assets and liabilities of the company. After the statement of affairs is submitted to the liquidator will start doing the process of realizing the assets and making payments. And after doing it, he prepares and submits a statement, and that statement is only called as liquidator's final statement of account. And this liquidator's final statement of account will have to be submitted. To whom should it be submitted? It has to be submitted to the court. In case of compulsory winding up, it has to be submitted to the court in case of compulsory winding up, and it has to be submitted to the company in case of voluntary winding up. So, to whom should it be submitted depends upon the mode of winding up, whether the winding up is a compulsory winding up or whether it is a voluntary winding up. If winding up is compulsory winding up, the liquidator's final statement has to be submitted to the court, and in case if it's a voluntary winding up, then the liquidator final statement of account has to be submitted to the company. I hope you are clear till this. Okay. Now, let me proceed with the format of the statement of affairs. Okay. Knowing this format is very, very essential. Only if you know this format clearly, you will be able to work out problems involving the preparation of statement of affairs. Okay. Usually, how will you give the heading for a balance sheet? You will be giving balance sheet of such and such company as on such and such date, isn't it? Likewise, since the statement of affairs is also showing you information relating to the assets and liabilities of the company, for the statement of affairs also, you will give the heading as statement of affairs of whatever is the name of the company. Say, for example, if the name of the company is XYZ Limited, then you will be writing it as statement of affairs of XYZ Limited as on such and such date. So whatever is the date that is mentioned in the problem, that date you will be mentioning. So this is how you will be giving the heading for statement of affairs. Then you will start with columns. First you will be giving the heading as assets, and one small column is for rupees, and in that rupees column you have to write as estimated realizable value. This is because when we record the assets in the statement of affairs, we are going to record the assets in terms of their estimated realizable value. In case of estimated realizable value is not available to us, then we'll be taking the book value, which is nothing but the value that is already given in the problem. So how will you give the heading for this amount column? It is going to be estimated realizable value in terms of rupees. Now, one thing you have to keep in mind, this statement of affairs, it involves various lists starting from list A to list H. Okay. So it starts from list A and ends up with list H. Out of these various lists, list A and list B, these two lists are concerned with assets. Then list starting from list C to list H, all these are concerned with liabilities. That's a very important thing which you have to bear in mind. Okay. List A and B alone are assets list, and starting from list C to list H, we have got list relating to liabilities. So let us proceed with the format now. As per the format, the first heading you will be having is assets not specifically pledged as per list A. Under this heading, you will be recording all those assets over which there is no charge. Okay, you know what is meant by a pledge, isn't it? Pledge is a way in which charge is created over the asset for the purpose of securing a loan. So those assets over which there is no charge, all those assets will come under the heading assets not specifically pledged as per list A. So what all will you have here? You'll be having cash in hand, balance at bank, marketable securities, bills receivable, trade debtors, loans and advances, unpaid calls, stock in trade, freehold property, land and buildings, plant and machinery, furniture and fittings, investment other than marketable securities, livestock also, livestock, other property, etc. Okay, so by having a look at this long list, don't worry that how to remember all this. It's very simple. All the assets over which there is no charge, no, those assets will be listed here. That's all. You need not be very specific regarding the order of these items, and you will not get all these items in every problem. Whatever is available in the problem, those items alone you mention here. Okay. Only one tip I would like to give you while mentioning the assets. No, those assets which are more liquid and current, all those current assets list out first. For example, cash in hand, balance at bank, marketable securities, bills receivables, trade debtors, and all that. After listing out those assets, go step by step. Okay. Then you start listing out those assets which are fixed assets like freehold property, land and buildings, and all that. Okay, so if you keep this in mind, it is enough. Nothing more than this is required. So, what is list A actually? List A is assets not specifically pledged. Okay, that's why you're writing assets not specifically pledged as per list A. I hope you are able to understand what will come under this heading. Now, let us proceed further. Before you proceed to list B, you have to find out the total of this estimated realizable value column. Okay, so that will tell you the total of the assets not specifically pledged as per list A. Now, the next one we have is assets specifically pledged as per list B. Under assets specifically pledged as per list B, you will have four small columns. One is for estimated realizable value. The next one is for due to secured creditors. The next one we have is for deficiency ranking as unsecured. And the last one is surplus carried to loss column. Surplus carried to loss column. So these are the headings which you will give for the various items which are coming under list B. Okay. Now, under this, you have to enter those assets over which there is charge. Those assets which have been specifically pledged. Okay, those assets over which there is a charge, those assets will be listed here. Those assets will be entered here. In the problem itself, there will be clear information regarding a charge was created over land and buildings, or a charge was created over plant and machinery, something like that. Such information will be available. So, taking that information, you will be proceeding with this list B. Just for the sake of example, let me tell you, let us assume that some charge is created over plant and machinery. Okay. And so it will come under which list? Since there is charge over it, it will come only under list B. So what we have to do here is, here we'll be entering plant and machinery, and we have the first column, column A, as estimated realizable value. So whatever is the estimated realizable value, that will be given to us in the problem. Just for the sake of example, let me mention here that the estimated realizable value is 2 lakhs. Okay. Now, column B is for what? Column B is for due to secured creditors. So, whatever is the amount which is actually due to the secured creditors, that will come here. Let us imagine that the amount due to secured creditors is 1,50,000. Okay. So, by creating a pledge over plant and machinery, your loan was taken for how much? It was taken for 1,50,000, but the plant and machinery, when sold or realized, what was the amount received? The amount received was 2 lakhs. So, estimated realizable value is 2 lakhs, whereas due to secured creditors is only 1,50,000. So, what do you have? Do you get deficiency or do you get a surplus? So, what is going to be received as realizable value is more than what is actually due, isn't it? So, we have only surplus here. 2 lakh minus 1,50,000. There is a surplus, and if there is surplus, that will be taken to the loss column. So, it is this surplus 50,000 which will be taken to the outer column as such. 50,000. Okay. So this is an example where you have a surplus actually to be carried to the last column. Now let us imagine that there is one more asset, for example, furniture and fixtures. Okay, and let us imagine that the estimated realizable value here we have is 3 lakhs. The estimated realizable value is 3 lakhs, but what is due to secured creditors is, let us imagine that it is 3 lakh 50,000. Okay, now what is due to secured creditors is more than the estimated realizable value. What is due to secured creditors is how much? It is 3 lakh 50,000. What is the estimated realizable value of the asset over which a pledge is created? It is only 3 lakhs. So here do we have surplus of deficiency? Obviously we have a deficiency. How much is the deficiency? The deficiency is for 50,000 rupees. So that 50,000 will come in deficiency ranking as unsecured, that is column C. So as far as this particular situation is concerned, if you get a situation like this, if you get deficiency, nothing will come in the outer column. But the deficiency will be regarded as what? It will be regarded as unsecured creditors. Okay, when it is not covered by securities, what is it? It is unsecured only, no? That is why we are writing it as deficiency ranking as unsecured. In this example, how much is deficiency? Deficiency is this 50,000 rupees. This deficiency will be regarded as unsecured creditors and it will be shown under liabilities when we start making payment. This should again be considered as unsecured creditors. So that will be shown under liabilities actually. This 50,000 will be shown where it will be taken as unsecured creditors and that will be shown under liabilities. Right? Now, having prepared assets not specifically pledged as per list A and assets specifically pledged as per list B, we have to find the total. So what is this total? This is the estimated total assets available for preferential creditors, debenture holders, bank overdraft and unsecured creditors. Okay. So with the total assets which is here, what is this total? I think you are able to understand this clearly. This total is the total of list A and list B. That is what is the total we have here. Okay, it's the estimated realizable value of the various assets. With the help of this, you will be making payments as per the order of payment. I hope you all will know what is meant by the order of payment. You can't make payment in any order you like. You have to follow this order of payment which is already prescribed. Okay, so you'll be making payment to the preferential creditors first, then to the debenture holders, then to bank overdraft if any, then to unsecured creditors. After settling unsecured creditors also, if there is any balance, then it is available to shareholders. There again, preference shareholders will get first, then the equity shareholders. So like that, you will be making payment to the various parties one after the other with the help of which amount? With the help of this amount. So how will you call this amount? This amount is called as estimated total assets available for whom? Available for preferential creditors, debenture holders, then bank overdraft and unsecured creditors. Okay. Now, before you start making payment under the heading liabilities, you have to prepare a small statement called a summary of gross assets. Okay, this again is a part of the format. This will come only in the main column. Nothing will be entered here in the outer column. So write the heading as summary of gross assets in the main column. Under that first you will be recording gross realizable value of assets specifically pledged. This gross realizable value of assets specifically pledged is nothing but whatever you have in this column A. Okay, this is what estimated realizable value, isn't it, of assets specifically pledged. Only that will come here. So, gross realizable value of assets specifically pledges this amount. You need not write as A when you write it in the exam and all. To make you understand clearly, I have mentioned it as A here. Okay. Then the next one is other assets. This other assets is nothing but the total of list A we had. So first we are preparing this list, isn't it? What is that? Assets not specifically pledged as per list A. After that we'll be getting one total, isn't it? This total. So this is what is the total which we are going to mention here as other assets. So what do you mean by other assets here? Other assets here means assets not specifically pledged. So that will come as list A here. Okay. This writing of list A also is not necessary to make you understand. I've given it. Now after entering these two, find the total. That total will give you the total of gross assets. So what is this? This amount represents the total of gross assets. So with this, all information relating to assets is over. Everything relating to assets is over with this. Now we have to get along with liabilities. So give the heading as liabilities. The moment you start with the heading liabilities, you have to create one more column, that is the margin column, in which you will start entering gross liabilities. That will start, you have to start entering that, and that will come as a heading here, gross liabilities. And then when you write as liabilities, no, immediately you have to write as to be deducted from surplus or added to deficiency as the case may be. See, you have a surplus already, isn't it? What is that surplus? It is the total of list A and list B together. With that surplus, you will start making payments one after the other in the order. You'll be paying preferential creditors, debenture holders, bank overdraft, unsecured creditors, and all that you'll be paying. But up to a certain limit only, that surplus will be available. After a particular point, the surplus will get totally exhausted and you will start getting deficiency. So from that moment onwards, you will start adding to the deficiency. Till you have surplus, you will be deducting the payments from the surplus one after the other. But once you get a deficiency, from that moment onwards, with the deficiency, you will start adding payments one after the other. That is why we have given it as to be deducted from surplus or added to deficiency as the case may be. So you'll be able to understand this better when I give my further explanations. So first, under the selling liabilities, what we'll have is we'll be having secured creditors as per list B. The secured creditors as per list B, nothing will come here. In this outer column, nothing will be entered. It will come only in the gross liabilities column. Here alone, you will enter the amount. This is because in case of secured creditors, the securities will be realized and the amount will be settled. So actual payment is not going to be made here. Okay. By realizing the security, the amount is going to be settled. No actual payment here. So nothing will come here. So you will have the amount only as only in the gross liabilities column. To record this as a liability, only in the gross liabilities column you will have this amount. And how much will be this amount is nothing but B minus C. To the extent to which claims are estimated to be covered by assets specifically pledged. Secured creditors as per list B, to the extent to which claims are estimated to be covered by assets specifically pledged. So for this, you can have a look at this. Whatever you have in this column B due to secured creditors minus whatever is the deficiency ranking as unsecured, that is column C, B minus C, that will give you this amount. Which amount? Secured creditors. Okay. So as I told you, no amount in the outer column. So that's why I've written insert in gross liabilities column only. No need to write this when you write it in the exam. To make you understand, I've given it insert in gross liabilities column only. It's going to come only here. Then after that, next will be preferential creditors. In the order of payment, who enjoy priority is, it is the preferential creditors. They enjoy priority in getting payment, isn't it? So you'll be writing preferential creditors as per list C. Preferential creditors as per list C. From now onwards, you will start mentioning the amount in this outer column as well as in the gross liabilities column. Let us, just for the sake of example, let me tell you that preferential creditors amount to 2 lakhs. So you'll be entering 2 lakhs here and you'll be entering 2 lakhs here also. Okay. From what amount will you make this payment of 2 lakhs? This amount of 2 lakhs will be paid out of the total surplus available or the total assets available. estimated total assets available, no? From this total, this payment will be made. Just for the sake of example, let me tell you this here you have 30 lakhs. Just to make you understand, I'm giving this amount to you. Let us imagine that you have 30 lakhs here. Okay, from this 30 lakhs, what is the payment made to preferential creditors now? 2 lakhs is the payment made, isn't it? So 30 lakhs less 2 lakhs because payment is already made. Now you will have a remaining amount of 28 lakhs. This is after making payment to preferential creditors. Okay. So this 28 lakhs, it is available for whom? It is the estimated balance of assets available for debenture holders and unsecured creditors. To whom this amount is available? This amount is available to debenture holders and unsecured creditors because as per the order of payment, who are to be paid after preferential creditors? Only the debenture holders. So this is how you will write it. Estimated balance of assets available for debenture holders and unsecured creditors. I think till this you are clear, is it not? Right. Now, let us proceed further. Next, in the order of payment, who has to be paid? Debenture holders. Debenture holders. What is the list here? You have to write as debenture holders as per list D. It comes only in the alphabetical order A, B, C, D like that. Okay. A and B are a list relating to assets. Then C is for preferential creditors. D is for debenture holders. You remember like this, no? D debenture holders starts with D and debenture holders is list D. Okay, list D is for debenture holders. Debenture holders secured by floating charge as per list D. So let us imagine that the debenture holders, the amount given to you in the problem as debenture holders is, just for the sake of example only I am telling you, let us imagine that it is given to you as 3 lakhs. Debenture holders given in the problem is 3 lakhs. So you will be entering 3 lakhs here and you will be entering 3 lakhs here also. Okay. Now that is entered. Then if at all you have any bank overdraft, that will come here. If bank overdraft is given, that you will enter here. Again you will be entering it here also. Okay. Supposing you have made payment to the debenture holders, what will happen now? 28 lakhs minus 3 lakhs. Now here will be, here there will be a balance of 28 lakhs minus 3 lakhs. Will be having a balance of 25 lakhs. So what is this 25 lakhs? Estimated surplus available for whom? After paying debenture holders, whom should be paid? Unsecured creditors, isn't it? So this is the estimated surplus available for unsecured creditors. Okay. Now, whatever is the unsecured creditors, that has to be entered here. So you will be writing as unsecured creditors as per list as per list E. Unsecured creditors as per list E. When you enter unsecured creditors, remember you have to bring down whatever unsecured creditors you had in that column C earlier. Okay, so that's what is given as unsecured creditors brought from preceding page. Any unsecured creditors given in the problem will come. Apart from that, unsecured creditors brought from the preceding page. Column C. Remember what it is? When we prepared this list B, under list B, column C is what? The column C is deficiency ranking as unsecured, isn't it? That time itself I told you this amount will be shown under liabilities. Since it is unsecured creditors, it will be brought down here and it will be shown under list E. So this is what is that amount. Unsecured creditors brought from preceding page. Whatever you have in column C, that will come here. Then if you have any trade creditors that will come, bills payable if any will come, outstanding expenses if any will come, liabilities on bills discounted if you are given the problem, that will come. All this put together will be regarded as what? Will be regarded as unsecured creditors. Now that unsecured creditors, whatever you are getting, you'll be entering here and you will be entering here also. Okay, now you have to deduct from 25 lakhs, that amount has to be deducted. So let us imagine that the unsecured creditors finally come to a total of 30 lakhs. Okay, 30 lakhs. So what is the amount available? The 30 lakhs now it has to be entered here, and again we'll be entering 30 lakhs in this gross liabilities column also. So how much we had earlier, estimated surplus available for unsecured creditors. Estimated surplus available for unsecured creditors is only 25 lakhs, whereas what is the total amount of unsecured creditors now? It is 30 lakhs. So from now onwards, we will start getting negative. 25 lakhs minus 30 lakhs, we get minus 5 lakhs, isn't it? So this negative we called as deficiency. Call as deficiency. That is why in the very beginning we wrote as under liabilities to be deducted from surplus or added to deficiency as the case may be. Till now, till this particular point, uh, till this we have been getting only surplus, so we were deducting one amount after the other. But now what has happened is what is due to unsecured creditors is more than what is available. Okay, so we get a deficiency. What will be the deficiency? The deficiency will be 25 lakhs minus 30 lakhs, it will be 5 lakhs. How will you call this? This will be called as estimated deficiency. Why you call it as deficiency? Because it is coming in negative. This amount is coming in negative actually. Okay, 25 lakhs minus 30 lakhs, it is a negative. So we call it as estimated deficiency. So this estimated deficiency is as regards creditors being the difference between gross liabilities and gross assets. At this stage, being the difference between gross assets and gross liabilities and gross assets. At this stage, you have to find the total of this gross liabilities column, and this has to be compared with the total of this gross assets. Okay, so you have to find the difference between these two. The difference between gross assets and gross liabilities. That difference which you are getting here must be the same as whatever amount you get here. Okay, then only it means that your answer is right. So with this particular piece of information, we will not be using this column anymore. It's over with this. Okay. Now we have to proceed with other people, isn't it? Shareholders. So under shareholders who have the priority, the preference shareholders have got the priority. So next heading will be issued and called up capital. Under that preference shares, so many preference shares of so many rupees each. Whatever is the number of preference shares, that you will be writing. For example, let us imagine as just write as 1,000 preference shares of rupees 100 each. So 1,000 preference shares of rupees 100 each. How much will you get? 1 lakh. And then equity shares. Let us again imagine that some equity shares are there. 1,000 equity shares, 1,000 equity shares of rupees 50 each. So you will be getting 50,000. These amounts may not have any meaning as such, just to make you understand only I am giving this. Smaller amounts will make you understand easier, better. That's the reason why I am just mentioning small amounts here. Okay, it may not have practical relevance as such. 1,000 equity shares of rupees 50 each. So preference shares as per list F, equity shares as per list G. As I told you all already, everything comes only in an alphabetical order. In the alphabetical order, list E is for what? It is for unsecured creditors. E, F, G, isn't it? After E, F is for preference shares as per list F, preference shares as per list F, and equity shares as per list G. From now, we are having only deficiency to be deducted from surplus or added to deficiency as the case may be. So already 5 lakh is there. With this, all these amounts will have to be added to deficiency. Isn't it 5 lakh? With that, you'll be adding 1 lakh, 6 lakh. With that, you'll be adding 50,000, 6 lakh, 50,000. Because it has to be added to deficiency. So you'll be having finally 6 lakhs 50,000. So what is the 6,50,000? This is the estimated deficiency as regards members. They are also known as contributories as per list H. So this is the last list we have, list H, as far as statement of affairs is concerned. So this is how you have to do statement of affairs. This is the format. So I have simplified the format and I have given it to you. Hope you are able to understand this format clearly. So let me quickly summarize everything right from the beginning. So first you will be mentioning the heading statement of affairs of such and such company as on such and such date. Then you will be having two lists, namely list A and list B. These two lists are for assets. Assets not specifically pledged as per list A, then assets specifically pledged as per list B. Under list B, you will have four small columns, one for estimated realizable value, then one for due to secured creditors, then deficiency ranking as unsecured, then surplus carried to last column. Here I have already told you only if you have surplus it will come in the outer column. If you have deficiency that will be regarded as unsecured creditors and will be shown under liabilities only. Then you will be finding out the total of list A and list B. That total you will write as estimated total assets available for preferential creditors, debenture holders, bank overdraft and unsecured creditors. Then you are supposed to prepare a summary of gross assets. After preparing the summary of gross assets, you'll be giving liabilities as the heading. Once you give the heading as liabilities, immediately you have to write as to be deducted from surplus or added to deficiency as the case may be. Then one more column, the margin column, you should have as gross liabilities. Okay, first you will be entering secured creditors. Remember, secured creditors will be inserted only in gross liabilities column. It won't come in this outer column. Then you will have preferential creditors as per list C. From preferential creditors onwards, once you will enter the amount in the outer column, once in the gross liabilities column also. Then after paying them, you will have the balance of assets available for debenture holders and unsecured creditors. Then debenture holders is as per list D. If you have bank overdraft, that is also as per list D. I told you to remember D for D. Debenture holders, it is actually list D. Okay. So after settling them, so for debenture holders and all, once you mention the amount here, it has to be mentioned in gross liabilities column also. After settling them, you will have the estimated surplus available for unsecured creditors. Then you will be writing unsecured creditors as per list E. Whatever unsecured creditors are available in the problem, that will come. Then whatever unsecured creditors you had in column C, earlier under list B, that will also come here. Then the rest of the items will come. Then you will be deducting the unsecured creditors from the surplus. At this juncture, you will not have surplus because the surplus will be inadequate. In this example, I told you 25 lakhs will be the surplus available, but 30 lakhs is the unsecured creditors. So what will happen? You will start getting deficiency. You will get negative amount and the negative amount will be called as deficiency. So that is called as estimated efficiency as regards creditors being difference between gross liabilities and gross assets. So at this stage, you have to find out the difference between gross liabilities and gross assets. That difference and this amount which you are having in the outer column will have to be the same. Okay. With this particular column, gross liabilities column will get over. Then you have to proceed with issued and called up capital. First priority is to preference shares. So you'll be entering the preference shares there. That is as per list F. Then equity shares is as per list G. Since it is deficiency, this 5 lakhs is deficiency. These amounts will get added up with the deficiency. So 5 lakh plus 1 lakh, 6 lakh plus 50,000, 6 lakh 50,000. This will be regarded as the estimated efficiency as regards members or contributories as per list H. So this is how you will be preparing the statement of affairs. Hope you are clear with the format of the statement of affairs. In my next video, I will be working out a problem involving the preparation of statement of affairs. If you like this video, subscribe to my channel and also share it with your friends. Thank you very much for watching this video.